Traders, welcome back to the show. Today, we're going to explore a topic that many new traders overlook, yet it is one of the most powerful tools in the toolkit of a disciplined market participant: volume analysis. Think of price as the surface story of the market, the candlesticks, the highs and lows, but volume? Volume is the heartbeat beneath that story. It tells you whether the market is alive with conviction or merely drifting along with weak interest. When you start paying attention to volume, everything changes. You begin to see the true strength, or weakness, behind every price move. Volume, at its core, is simply the total number of shares or contracts traded during a given time period. That's straightforward, right? But here's the nuance: it's not just the raw number that matters, it's the context. High volume on a price rise tells you buyers are committed, high volume on a drop tells you sellers are dominant. Conversely, if a price moves dramatically but the volume is thin, that move lacks conviction. That's the kind of insight that separates the reactive trader from the strategic trader. Now, why does volume analysis matter so much? For starters, it gives you a window into market dynamics. Markets are driven by human psychology: fear, greed, hesitation, confidence. Volume reflects that psychology in real time. When volume surges, it signals heightened participation and engagement. When it dries up, it shows hesitation or uncertainty. For example, a sudden spike in volume can indicate that institutional players are entering or exiting positions, and that kind of insight is invaluable because institutions move markets. Volume analysis also helps confirm trends. A rising stock accompanied by increasing volume is more likely to continue its uptrend than a rising stock with declining volume. Conversely, when prices rise but volume drops, the move is on shaky ground, and a reversal could be imminent. This concept is essential for spotting both entry and exit opportunities. You're not just chasing a candle, you're understanding the strength behind it. Let's make this tangible with a real-world example: the 2020 COVID-19 market crash. In February and March 2020, global stock markets plunged as fear and uncertainty spread. The S&P 500 lost more than 30% in a matter of weeks. During this sell-off, trading volume spiked dramatically. Each spike in volume was not just a number, it was a sign of panic, of widespread participation in selling. Savvy traders watching the volume could see that selling pressure was reaching a climax. As the market bottomed in late March, something interesting happened. Even as prices continued to decline slightly, volumes began to drop. This divergence, falling volume against falling prices, signaled that the intense selling pressure was weakening, and a reversal was likely imminent. In practical terms, volume told traders, the worst is over, prepare for a bounce. And indeed, in the months that followed, the market began an extraordinary recovery, confirmed by rising prices accompanied by rising volume. Periods of low volume during that recovery often marked pauses, temporary breathers before renewed upward momentum. Observing volume gave traders the confidence to enter the market strategically, rather than reactively. Now, let's talk strategy. There are a few key tools and approaches you should know. First, on-balance volume, or OBV, which accumulates volume depending on whether the price closed higher or lower. It's a powerful way to gauge cumulative buying and selling pressure. Then there's the volume moving average, which smooths out the daily noise and helps identify trends in volume activity over time. The Chaikin money flow is another excellent tool. It shows the balance of accumulation and distribution, giving insights into whether buyers or sellers dominate the market. But even beyond indicators, understanding patterns is crucial. Watch for volume spikes, these often precede significant moves. Recognize volume climaxes, which typically occur at the end of trends, signaling exhaustion and possible reversal. And don't ignore volume dry-ups, periods of low activity that often precede explosive moves when a catalyst hits. Combining these observations with other technical tools, like moving averages, support and resistance, and candlestick patterns, gives a complete picture. Here's a case study that I often share with my students. Let's take a hypothetical trader, Sarah, navigating a volatile tech stock. Early in her analysis, she noticed the stock rising steadily, but the volume was declining over several days. She realized this divergence meant the uptrend was losing steam. Instead of blindly buying at new highs, she waited for a volume spike confirming renewed buying interest. When that spike occurred, accompanied by a breakout above resistance, she entered her position. By respecting volume, Sarah avoided chasing a weak trend and caught a move with strong participation, maximizing her potential gains while minimizing risk. This is a concrete example of how volume can guide decision-making beyond mere price action. Volume analysis isn't just about spotting trends, it's about managing risk too. High volume at support or resistance levels can provide more reliable signals for entries or exits. Low volume breakouts often fail, so understanding volume protects you from traps. Combining volume with your risk management rules, like setting stop losses based on high participation levels, can dramatically improve your trade outcomes. As the famous trader Jesse Livermore once said, "The game of speculation is the most fascinating game in the world." But it requires attention to the real forces behind price, not just price itself. Volume is one of those forces. Here's a practical exercise for you this week. Open up your charts and track volume alongside price action for a stock or market you trade. Note the volume spikes, climaxes, and dry-ups. Compare these to the highs, lows, and turning points. Ask yourself, where did volume confirm a trend? Where did it warn of a reversal? Document your observations and, if you're feeling ambitious, share your insights in the comments section. I want to see which patterns you noticed and how they could have guided real trades. To sum it up, mastering volume analysis gives you an edge few traders fully exploit. It confirms trends, identifies reversals, and provides insight into the true strength of market moves. It can help you avoid emotional mistakes, time entries more effectively, and build a disciplined, structured approach to trading. Volume is not just a number, it's a reflection of collective market psychology, a gauge of conviction, and a roadmap for navigating uncertainty. So, as you continue your trading journey, pay attention to volume. Treat it as a guide, a teacher, and sometimes, a warning system. Combine it with price action, support and resistance, and other technical tools. Look for spikes, climaxes, and dry-ups. Use OBV, VMA, or CMF if you want systematic confirmation. The more you integrate volume into your routine, the more confident and informed your trading decisions will become. Remember, trading is not about guessing, it's about interpreting the heartbeat of the market and moving with conviction. And now, a question for you, my fellow traders: which assets or markets have you noticed volume signaling major turning points recently? Drop your thoughts in the comments. I'd love to hear how volume has guided your decisions and what insights you've uncovered.
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading.